Welcome back to another closing live stream. Welcome, everyone. Yes, we are definitely seeing a bit of a red market here. We've actually got the indices down today, as well as some of our favorites down today as well. So let's see here. I just want to quickly confirm we've got all of our audio and everything's good to go. Yep, there we go. Okay, good. Sounds good. All right, folks. So let's take a peek at what's going on in the market. We are 29 minutes to the closing bell. Things have been painful in the day, especially regarding Tesla, Peloton. Let me go ahead and move myself again. I did make a video on Peloton specifically. So if you have questions about Peloton specifically or Tesla specifically, there is a video for you. All right, so let's take a peek first at what's doing well today. Let's start with some green. So we've got the Doge really holding on to that 39 here. Let's go to the 1 minute chart on the 39 and zoom out a little bit. We really see, ups and downs, but really stick into that 39 level, which is really where all of this this sort of up and down is. We did cross into the 40-cent range earlier this morning, but mostly holding on to this 39-cent range here. So somewhat range bound between, it looks like, maybe 38 and 40 cents right now, between those two pennies, bobbing back and forth right now. All right, so Doge still doing well, up that 13%. Naked running all of a sudden, looks like Naked kind of grew throughout the day here. Yeah, I'd say throughout the day. Started the day out not so great. A little bit of a run over here up to about 54 cents, running up to a high of 56.5 at about 54.8 right now. Sundial running as well. Not as much as we saw when we opened up this morning, though. Sundial this morning really took off to about 15%, along with some of the other momentum moves like ZOM. But ZOM's, there it is. ZOM's right here down at about 2%. Whereas we've got Sundial holding on to about 10%. Both of these were up 15% at one point this morning. AMC moving just shy of 3%. GameStop pulled back a chunk here. A lot of euphoria went into GameStop during the market open. We probably, I would say, the first hour and a half here of market open, mostly following the doubling down of Roaring Kitty and the departure of another executive in Ryan Cohen's continued quest to replacing all of the executives over at GameStop so we can try to overtake the company and turn it into something great. Of course, everybody's holding on to their seats to see what kind of transition we'll end up getting for GameStop to be able to compete in the virtual world. Maybe with, personally, I think you got to have like competitions in store again, in-game experiences, get that virtual reality tests, trial stations in store. We'll see what ends up happening. To me, in my opinion, you turn it into more like an Apple store instead of a store that's full of stuff, full of experiences. You touch it, try it. Then Neo and XBank doing okay today, recovering from pitiful levels, and I mean we're still honestly at pitiful levels at 31 on 31 on XBank and 36.66 on Neo. Still very depressed levels. The EV sector overall pretty beat up. Netflix does report earnings this week. We do start earnings. The earnings season really kicks off this week, actually. We've got Enphase reporting this week. American Airlines, United report this week. And it's going to be much more of a start to the market over the next 6 weeks here, starting this week, as these earnings come in, because everybody's going to keep an eye on these earnings to justify some of these higher valuations. In fact, we do have United reporting today at 5 p.m. Eastern, which is an hour after the bell. We have IBM reporting at 15 minutes after the close. This is for today. Those are the top two probably today. So Intel and not Intel, IBM and United potentially setting a stage for this week. Of course, the stage has already been set pretty uglily. That's a word, probably not, for how stocks have been performing. We do have Target up about a third. We've got United States Oil up about 0.2%. Apple flat, Alphabet flat. And these are really keeping the indices in check. The big names, the Apple, the Alphabet, the Amazon. Looks like Churchill's down about a half to 3/4%. Amazon.com's down actually in the 1% range for Amazon. Continuing on down, we got Disney down 0.5%. A lot of kind of following a lot of the Dow and everything else. 24 minutes to the close. Trimble's down 1.3%. Another ARC holding there. Ubiquity down again 2.3. Beyond Meat's at 134. Still not at that 120 level, but definitely been teasing it for quite some time here. I've seen recovery stocks like Dave & Buster's trend down a little bit over the last probably 2 or 3 weeks here. We've got Etsy's down 3%. Matterport down again 3.2%. This is where ARC's coming in. ARC Innovation coming in about 3.4% down, with Tesla down 3.6%. Big move there on Tesla. A lot of fear, uncertainty, and doubt around the crash in Texas. Keep an eye on, if you have not yet, check out the video that I made on the on my theory regarding the Tesla crash. So then we've got NVIDIA, Redfin, and Square and Microvision all down almost 4% here. What's interesting about that is we do have NVIDIA. NVIDIA has been on a pump lately, and so it's selling off with some of the other companies here recently. What do we got? Shifts over in this range. Coinbase down at 330, 348. Shift, Tesla, NVIDIA, Redfin, Square, Microvision, ChargePoint, Ethereum. All these guys down about 4% today. Affirm down again, down 5%. Certainly not seeing any love at Affirm or C3AI. Where is AI, by the way? C3AI. C3AI. Oh, yeah. C3AI is down 7%. We haven't gotten down there yet. Hold on. Getting ahead of ourselves. Jeez. Virgin Galactic. Oh, my goodness. It's at 22. It's at 22. It's crazy. The IT guy says bye, bye, bye. Yeah. Let's see. What else we have here? We've got Open Door at 17.3. These are getting to be some low prices here. I'm going to have to start comparing some of these prices to what we saw March 5th and March 8th. Yeah, see, look at that. We've really just been trading sideways on a stock here like Enphase. Great, phenomenal company, high margin company, very profitable business. Down to 129 on March 5th, currently at 140.3. Okay. What else here? Okay, hold on a sec. Hold on one sec. All right, sorry, continuing on. So yeah, the sideways trading here on Enphase, still not hitting those March 5th lows that we did see. That seems to be the case for a lot of stocks. I mean, given, Square is substantially higher than its March 5th lows. March 5th, it was around 191. Redfin is pretty close to March 5th levels here. Redfin's over here at 63, and it hit lows of about 58. You've got, let's see, Microvision. Microvision's almost surpassing March 5th lows. We just broke 10 briefly intraday on March 5th. Tesla's well beyond the March 5th lows. March 5th lows went down to 539. And so even with this FUD here, we did drop back down to, it looks like another potential support level here. But, yeah, not too terrible of a correction, given how much of a sell-off we did have in March. So it's somewhat interesting to compare these. We go back to, for example, March 5th on EXPI. We were actually at 37. We're lower. We're at $35 right now on EXPI. And even lower intraday, went down to 34. That's about $3.50 less than the lows that we saw in March. So certainly an unevenness here in the market. $94 was the low on Peloton, currently at 107, and that's also with some pretty ugly news coming out. Yeah, ChargePoint's another one. Let's take a peek at ChargePoint here. ChargePoint hit lows of 1950. It's currently at 2180. So also, again, approaching those lows. I certainly think that SPACs are going to be continuously in for it here until we start seeing the new SEC chairperson that was sworn in really start regulating in a way that shows at least maybe some favor to SPACs, or at least provides clarity to what the accounting practices should be regarding warrants at SPACs. That's going to be very important as well. I made a video on that, so that it confuses you, make sure to check that out. Just type into YouTube, Meet Kevin, SPAC disaster, or something like that, and I'll explain warrants and how they work and all that in that video. That's already been posted. Oh, keep in mind, I forgot to mention this. I should mention this. We do have that sale for the charitable NFT expiring. So if you go to, I think it's, rarible.com/realmeetkevin, the Buy the Dip music video NFT, which you can grab with MetaMask or whatever, whenever this loads here. I'll let that load over here. Rarible.com/realmeetkevin. I'm just getting the pinwheel on it now, which is great, but whatever, we'll pull up. That's where the Buy the Dip NFT is, and my portion will be going to charity. That does expire tomorrow, 4/20. Okay, moving on. We've got Zoom at 323, Intel down 2%. Let's see, Palantir's down 2.6%. Matterport down another 2.5% today. Etsy down 3%, Twitter's down 3%, Pinterest down 3%. There's Tesla at 3.5%. A lot of pain. Really, that SPAC market, in my opinion, potentially overselling. And I don't know what's going on. Rarible's not loading right now, so we'll have to come back for Rarible. Enphase, really clueless as to why the thing's got to be down 6%. It really seems to have traded with the SPACs, even though it's not. Kind of bizarre that you're seeing that a little bit. So no Voozy glasses have shown up yet, although they did say it would take a while. I thought they said it was like a 14-day lead time, so I feel like it's been less than that. All right, and then we have the big losers of the day. Let's sort by the big losers of the day. Let's sort properly here. There we go. Okay, so big digital assets down 18% all of a sudden today. They don't have a position in big. We got Playboy, a SPAC, is down 11%, probably also because of the whole SPAC madness. And Playboy's down 11.7%. But it's still up substantially from its $10 pipe, so it's still doing very well. I mean, it's been running like crazy. It's just recently selling off. Then you've got Marathon and Riot, the other blockchain miners here, down 8.9 to 10.2%. 8.9 for Riot and 10.1317% for Marathon. Tattooed Chef selling down about 11% today, along with Voyager Digital down 11.45%, down to 18.83. A lot of this fallout continuing after the Coinbase disaster. So then what else? QuantumScape's down 11%. Arcimoto's down another 9.8%. My goodness. Nano Dimension down to 668. Oh my gosh, we haven't seen that low of a price in a while. Plug Power, $25. I mean, we're virtually at all-time lows here. Yeah, Arcturus, Blink. Yikes, yikes, yikes. It's so much red. You know, even Invitae. Invitae hit March lows of 30.7. It's at 36 right now. Take a peek at CRISPR. You know, I've always been wanting to start a position in a larger position in these guys like CRISPR and Invitae. No, not quite at those March lows. March was about 100 relative to that 116 where we sit now. Yikes. All right, so let's go ahead and pull up what the mainstream media has to say. Let's see what they got to talk about. Let's listen in. Oh yeah. Well, can't push my buttons. There we go. All right, what do we got over here? Okay, we're talking about Iran. Okay, well, we're not going to do that because we're looking for the business stocks. All right, let's try this again. Let's see here. Let's go to, oh, yeah, there we go. Okay, so if you do type in rarible.com/realmeetkevin, it does show up, and you will see the Buy the Dip auction over here, which is exciting. This is the Meet Kevin. Real Meet Kevin. Let's listen in to Bloomberg. Let's see what Bloomberg. Look at this. Market mood turns risk off. Let's listen in.
For the market. All right, we're speaking here with Quincy Crosby, Chief Market Strategist with Prudential Financial. Quincy, we want to get some more thoughts from you. We need to take a commercial break, but she's sticking with us as we count you down to the close, a little less than 15 minutes to go here in the trading day. Stocks pretty much hovering around the lows of the day, 4160 right now on the S&P 500. The big underperformer, of course, on the day, you're going to find that in the Russell 2000. You're going to find that in the NASDAQ. Dollar weakness on this day, and I guess you could say a little bit of a bid, modest bid here coming into Treasury. Still looking at
market when we look ahead.
Oh, wow.
But that's not for today or
that was a very bizarre jump, but let's listen.
The market overall. When does the good news end? When does the good economic data end?
Quincy, you said something in there that it's a healthy market within an overbought market. Given those parameters, what do you do?
You just let it consolidate, and then you take a look, and obviously portfolio managers are going to see where they want to go, but the traders are, I think, having a little bit of difficulty being whipsawed, just as we saw, for example, with the Treasury market last week on Friday. You know, we had a short squeeze there. So as we start to get deeper into the earnings season, I think we're going to have more of a story for the market in terms of guidance. We already know that revenue growth is growing year over year, which is healthy, but the guidance is going to be crucial because at some point, maybe the end of the second quarter, end of the third quarter, we are going to be normalizing. And that's when it becomes much more difficult for the market.
All right, we're speaking here with Quincy Crosby, Chief Market Strategist with Prudential Financial. Quincy, we want to get some more thoughts from you. We need to take a commercial break, but she's sticking with us.
Oh, that's so weird. It just sort of like, it feels like it pulled back there for like 30 seconds. But anyway, so she just said something very interesting. I'm going to refresh this to make sure we got the latest Bloomberg live stream here. But she said something very interesting that's worth reflecting on. The person asked, what do you do? And her answer was, you let it consolidate, and then you see where it goes, basically. I think that's actually, in my opinion, it's really good advice. I mean, this is not the kind of market that I want to look at and go, oh, yep, I'm going to start selling. Like, why would I do that? Nail is a triple leveraged ETF. I don't do triple leverage anything. I think triple leverage is scary. Gets you into a gambler's mentality, and then if you're right, you get more risk on until you lose it all one day. You gotta be careful with the triple leverage stuff. Yeah, but anyway, so where was I? So her argument of let the market consolidate. That's what it's doing. It's been doing it for 2 months, honestly. It's been bleeding for 2 months, consolidating for 2 months. A consolidation is usually when you look at a chart. Here, I'll just pull up an example really quick. It's usually when you look at a chart and you see a fall, and then it kind of stabilizes at a lower level, right? So an easy one to look at, in my opinion, is end phase. So yeah, take a look at end phase here. So you see a run, highs, tests, new highs, consolidation, and now you're kind of bobbing around. Well, you know, you could say that this is really where it's narrowing. The more of this up and down is narrowing. This is generally what we would deem as a consolidation in the market. And yeah, you let the cards fall where they may. And then once we figure out, okay, well, where have things settled? Where do we want to go shopping? It's very difficult to say, oh, that's it. Sell everything at one moment. Pay all the taxes. Time it perfectly and get in. Because, for example, you could have done that with a stock like Fisker. But look at what Fisker's done. Fisker has been very, very bizarre. Fisker's been a stock that actually rallied to all-time highs during the beginning of this crash. See the start of March right here? Fisker was actually rallying and going crazy. And after that, we got a continued sell-off on Fisker. I mean, the thing's at $12. It's crazy how low Fisker has gone. Absolutely nuts. Kevin, would you like to comment on how Bitcoin is totally associated with so many stocks? It's totally associated. I'm not sure what you're asking. Bitcoin is not so correlated with stocks. Bitcoin, or certainly not the Dow. If you look at the Dow, and we can pull it up too. Oh, I'll log in really quick. The beta measure of Bitcoin is relatively low when you look at the Dow. When you compare it to the Dow, it's like 0.4 or something like that, which is very low. It just means historically it doesn't react the way the Dow does at all. It's a little bit more closely related to tech. I want to say tech, it might be more like 0.7 or 0.8, something like that. Still a little less correlated. All right, so we'll pull up the terminal. We'll get that. Let's listen into CNBC for a moment.
A few years back, so we'll see what happens there. Changing tune, kind of a little too late, some would argue, down 3.6% for Nvidia. Either way, Mike, how's the sector performed as a whole, and has there been much stock differentiation, or has it been a big group kind of driving factors over the last?
There's been some differentiation. I mean, it sputtered a bit recently. Certainly was not too far from its highs just before this latest little pullback, although it had stopped being really the locomotive of the tech trade a while back.
Semiconductors here. Yeah, we'll come back to CNBC here. It looks like the market may actually be pulling back a little bit more, as if there wasn't more room to pull back. Looks like, for example, Big Digital just had a little bit of a sell-off here in the last few minutes. These guys look roughly the same. Marathon, Riot, roughly the same. EXPI, a little bit of red here in the last 10 minutes here as well. Peloton actually going green in the last few minutes. Enphase 140, a little bit red. Square, also we got some red here. Tesla, yep, Tesla also falling. So far we got a fall into the close. We'll see how the market ultimately ends up, but today's one of those days many people are like, can we just put a lid on it already, because it's been painful enough. Looking at the green, Sundial still up that 10.7% though. Doge 15.6, almost back at that 40. Oh, looks like we briefly touched that 40 there for a moment. AMC up about that same, almost shy of 3%. Canoe turned negative. It was slightly green. Now it's about 0.1% down. Relatively small movement there on Canoe. Seems like it sort of hit a support level and around that 8.5 level. Twitter's down about 3%, but also trying to push into the close. Really been pushing throughout the rest of the day here. Pinterest, Etsy, each about 3%, sort of moving with the broader market. Matterport, 3.7%. Fluid here into the close. Lemonade's at $84. Hey, we're almost under 80. Almost under 80. Okay, let's go back to Bloomberg and see what Bloomberg has to report for us. So did want to listen into their convo. They had a good one going. All right, so pulling. I don't know where I put them. So we'll go over to CNBC for a moment.
For that, Julia. Well, Sarah, Mark Zuckerberg wants to make audio what he called a first-class social medium, just like text and video, and also to tap into the fact that audio is easier to make than video and can be consumed while people are on the go. Facebook is working on live audio rooms similar to Clubhouse, along with a short-form audio product.
Lots of competition for Clubhouse coming. Let's jump on to Bloomberg. We got it up.
Feels as though actually you only ever get one day of a sell-off and then dip buyers come roaring back, Quincy. I'm interested in, therefore, if you think that this market is going to push higher, which industry groups you really want to buy in at these sort of pullback levels. Is it the growth or is it the cyclicals?
You know, I think they can coexist. Take a look what we hear from Netflix. They come out of the gate first. We want to hear what they have to say. We want to see whether or not we'll see buyers come in if they give us a story of subscription growth, if they're going after people, I won't mention names, who borrow perhaps their children's check it. I'm not mentioning names, but the fact is, it's always a very important indicator for the big five. We'll see how they can do, but certainly they can coexist with the cyclicals. And I do think, the COVID is basically worrying the market.
All right, hold that thought for 1 second. Quincy Crosby, Chief Market Strategist at Prudential Financial. She's sticking with us as we count you down to the close. We got about 5 minutes to go here, and we want to get over the board. Taylor, you're taking a look at our stock of the hour.
Romaine, it is the stock of the hour because we push forward to earnings. It is not the Jets. ETS is one of Quincy's maybe other favorites. United Airlines, we're going to get earnings from them after the bell. So we take a look at where the stock is. You're off about 1.5%. Morgan Stanley saying the industry might finally be out of the tunnel, but you frankly are looking at estimates for full year 2021, and we are all over the place. So this is going to be a key stock to watch as we push forward and get any guidance about second, third, fourth quarter. Let's flip up board, and Quincy, let me bring you back into this conversation. I'm looking at equity ETFs that are finally outpacing fixed income ETFs in terms of inflows. How are you thinking about fixed income?
Problem is United isn't expected until an hour after the bell.
Well, you've seen also just in the broad spread in fixed income, the returns are narrow. Take a look at high yield. Those spreads are nice and tight, which is also, by the way, a very good indicator for the overall equity market. You don't want those spreads to widen. The credit default swaps are not an issue. So that's good. But the question is, how much are you going to have in the return? I think with all of the market, whether it's equity or credit, fixed income, it's selective. Right now, we're in the situation where it is selective. And I think
we're going to pull off the talk about fixed income. Let's go ahead and take a last minute look here at the sticks as we prepare for the close. So we've got a big digital recovering a little bit here, dropping from its 20% decline to a 16.6% decline. But Voyager Digital accelerating a decline in the last few minutes here, updating to being down 13% on the day at $18.50. Really just getting hammered here. We've got another. Tattooed Chef, by the way, is a SPAC. So SPAC, Tattooed Chef, SPAC, QuantumScape, both down 11%. Playboy is SPAC, down 10.3%. Arcimoto, Nano Dimension, Riot, Marathon, all these guys, 8, 9, 10%. Lots and lots of pain in the individual stock sector today. If we scroll all the way down, we'll get Dogecoin still sitting at that resistance level just under 40 cents, just under that 40-cent level. Doing very, very well here, though. We've got, which of the cryptos it's obviously doing well today. I mean, then again, I mean, you compare it to some of the altcoins, maybe it's a drop in the bucket, but just focusing on Bitcoin, Ethereum, and Doge certainly doing very well. Stuck, though, at that 40. It does not seem to be able to get on top of that. And you can even see that here in the pricing when you zoom in. You really top out at that 3994, 3995, 3996, 3992. There's something about 40 cents that's really holding back, Dogecoin here. And so I think if we get a real breakthrough on that, not like a little touch, it looks like the darn app's gone. We get a real breakthrough on that 40-cent level. Maybe that'll be what gets us pushing up and above some of the levels we haven't seen yet. For example, $0.50 on the way to potentially $1. The danger is tomorrow is 420 Doge Day. And if we don't get a big move on 420 Doge Day and we end up getting more sell the news, then today we'll end up going down as buy the rumor. Tomorrow will be sell the news. Yeah. Yikes. Okay. What else do we have here? So, all right. Oh, look, Churchill went positive again, fractionally positive. Zom's pretty much at zero for the day, actually went negative. Gosh, it was up 15% at one point and then went negative today. If you bought Zom at the peak just today, you'd be down over 15% right now, just on Zom. Yikes, it's incredible. Really, really intense movements here. See where Tesla is. We got 10 seconds to the closing bell. Tesla's sitting at down 3.4%. Let's get the bell.
Ahead of earnings tomorrow. Apple ahead of its event. Google is also higher. Staples are holding up better after those better Coca-Cola results. There goes the bell. And some of the riskier parts of the markets, like the SPACs or the crypto, that's what's getting hit as well. The ARK Innovation ETF down 3.4% in the close.
Welcome to the closing bell, everyone. I'm Wilfred Frost, along with Sarah Eisen and Mike Santoli, CNBC senior markets commentator, finishing down 0.5% on the S&P 500, a full percent on the Nasdaq, about a third of 1% on the Dow, and 1.3% on the Russell 2000. Two positive sectors just at the close: healthcare and real estate. Consumer discretionary, though, and technology both down the best part of 1%. Dollar soft down 0.5% today, and 10-year yield ticking up a bit to 160. Investors are set for a pair of big earnings. IBM and United will have those as soon as they cross, followed by instant analysis. Plus, investor Dan Niles will join us on the tech stocks he's betting on ahead of their quarterly results, of course, due later this week. Delano Saporu from New Street Advice is still with us, and Megan Chu joins us from Wilmington Trust as well. Good afternoon to you, Megan. Let's go to Mike Santoli, though, first of all. And Mike, as we've been discussing throughout, kind of due a bit of this pullback and still comfortably above 4,100 on the S&P 500. Where is it from here, and what are the key factors to look out for? All technical factors and positioning factors?
At least those are at the forefront, I think. Well, I mean, one of the themes that perhaps is relevant at this point is the idea of just how good is too good when it comes to how persistent the rally has been, how far it's gone up without much of a break to the downside, how many stocks have been now overbought, and also the economic data. The rate of change of improvement in terms of the macro numbers is probably close to peaking if it's not there yet. We do still have earnings estimates going up for 2021, but again, that pace of revision upward has been pretty strong, and the market tries to assimilate when that's peaking. You also have,
in other words, maybe we've already priced in a lot of the run, and now's the time to actually look at the reality and go, nah, okay, that's not as great as I thought it would be. Still, it's good. But it was good, but still not as great as I thought. The so to speak, like the chase was more entertaining than the actual results here in stocks. Take a look at this. We've got the 10-year right here. And so last week, 15th year, 16th, 17th, and through the 19th, really, through the weekend, the beginning of the 19th here in the morning, we had this reduction in 10-year yields down to about, at one point a low of 1.53, bobbed around that 1.58 range, kind of ticked up again a little bit, 1.6 over here. So a little bit of a tick up. And at the same time, let's, we're obviously seeing a bit of a red day here. Let's focus in on how things ended up today. Let's go to the all stocks chart. So it looks like Big Digital ended up 17% down. Now, Big Digital and Voyager, because they're OTC stocks, these may keep updating for the next few minutes. So we'll see how much buy the dipping there was on these here. Tattooed Chef. So if we remove those two, Tattooed Chef down 11.2, QuantumScape down about 11, Playboy 10.8, Arcimoto 9.8, Nano Dimension, my goodness, Nano Dimension 9.29. We've got Marathon Digital. Ended up 8.68, not as bad as things were throughout the rest of the day. SOS, Arcturus, Riot, all down about 8.5%. We do have IBM earnings coming out here momentarily, so we'll keep an eye on IBM earnings as soon as they come out. Then we've got EXPI down 7.5-ish, Peloton 7.25, C3AI 7. We have Shopify's down 5. Why is Shopify down? Shopify and Enphase down in that 5% range. Roblox down 5% again, giving up those higher numbers. Really, really difficult to see new highs here get made. Very Good Food, Square, Lemonade, Matterport, Tesla. All these guys getting hurt here, with Tesla down 3.4%. Relatively flat so far in the after hours, but after hours did just begin. Pinterest down 3% with Etsy. Twitter's down about 3%. We got API down 266. Ubiquity 233, down to 280 on Ubiquity. Lowe's down to 204 and down 2.04%. Zoom down 1.7%, down to 324. Beyond Meat 135, which is down 1.5%. Ford Motor Company at $12. Wow, I remember when Ford was like $6. 1.23. Crazy evolution we've gone through this last year. But I'll tell you, the last 4 months have been, well, specifically the last 2 months, been pretty tough for the markets. Lots of bloody red everywhere you look. Hey, look, CCIV actually ended slightly up for the day and up in the after hours about 0.5% so far. Apple at 135, really not doing poorly. Apple actually doing very, very well at the moment of where the market is. Got Dogecoin still sitting at that resistance level. Cannot seem to get it up above that 0.4, that 40-cent level. Sundial ending up 11%. Clover ending up 9.6% on that potential for a squeeze there. Though we did see a U-turn today in the short interest on Clover. We saw that short interest get adjusted down to that about 35%. Let's take a listen in here and see what the updates are as we wait for IBM earnings.
Towards infrastructure spending like industrials, materials, and even parts of energy, mostly the clean energy complex, they could benefit. They're also probably less likely to be hit on a relative basis from the tax increases. But we do think it's a headwind, particularly as you think about the compounding effects on technology, healthcare, and other growth names. These are parts of the market that get more of their revenue from overseas. And that focus from the Biden administration on taxing overseas revenue, the global intangible tax, and leveling getting more revenue from overseas is a bit more of an issue for those types of stocks than the headline corporate tax rate. So it's something we're watching. And we do think this will be increasingly priced into the market as we head into the second half of this year.
And then there's tech. Delano, we saw today a sort of divergence within the tech trade. The NASDAQ closed lower by more than 1%. Tesla, NVIDIA, Amazon, the chips we mentioned got hit today, but you had strength in Apple, in Netflix, Google, some of the other names. How do you play this sector, particularly as we get ready for a busy earnings period starting tomorrow?
Yeah, Sarah, that's a great question. I think the best way to play it is to be in your high conviction names. Netflix is a name that we have high conviction on, particularly because of the content. If you look at when, I think it was about 2019, when Disney Plus unveiled Netflix.
I'm going to go ahead and pull off the CNBC coverage here. They're definitely right about observing this divergence in tech. Let's listen to Bloomberg for a moment, see what Bloomberg has to say here.
Play it out and leave some of the teams that could just rise from the ashes and take it away. But money talks, Carol, money talks.
Well, listen, we see that play out in the U.S. sports teams, right? What they're looking to do with soccer over in Europe is very much what we already do here in the United States. And it really lets those big franchises, Tim, I know you love football. That's a not. But nonetheless, it lets those big franchises really dominate.
Yeah, it's a point that Alex Webb made on Quick Take today and in a column today. That is exactly what is happening. It's turning more and more American, and fans are not happy about it.
All right, folks, that's going to do it for our cross-platform coverage. What? What did you say?
He'll live with it.
I just wanted to get that in. All right, that's going to do it for our cross-platform coverage of the market close on Bloomberg TV, Bloomberg Radio, and on YouTube. We'll be back tomorrow at the same time, in the same place.
Okay, back here. IBM. So here we go. IBM just came in. IBM comes in at let's see here. Okay, IBM. Okay, oh my gosh, this is a long one. All right, hold on. Let me expand this really quick. Launchpad. There we go. Let me try to scroll around on this. Oh man, that's a long. Okay, revenue came in at 17.7. Okay, we had operating earnings per share came in at 1.77 versus estimates of 1.65. A slight beat there. Cloud and cognitive software revenue came in at 5.44 billion, slightly over that 5.39 billion expected. Total cloud revenue up 21% year over year. Earnings per share. Let's see. Earnings and 6 cents. That's not operating earnings per share. That's just earnings per share. And I think now CNBC is covering it as well. Let's listen in over here.
Yeah, this quarter at least. So a surprise item, both the bottom and top line. Adjusted EPS coming in at $1.77 versus $1.63. Expected revenue coming in at $17.73 billion. And as Sarah mentioned, this is a return to annual growth. I believe this is only the second time that we've seen quarterly revenue growth, not a decline, in at least a few years. So you're seeing shares pop on the back of that, up nearly 4%. Want to break out the cloud and cognitive revenue section, one that investors look to as IBM shifts to hybrid cloud, coming in a little better than $5.4 billion versus $5.3 expected. You also have CEO Arvind Krishna reiterating that he is confident that IBM can achieve full year revenue growth this year. And Sarah and Wilf, as I mentioned in the preview, in 8 of the last 9 years, IBM has seen revenue decline on an annualized basis. So this being the first quarter, closer to that goal, but we will have to see if they can keep up this pace for the rest of the year.
Yeah, some good momentum to start the year, no doubt. Deirdre, thank you. Deirdre Bosa. Mike, when you look at this 21% cloud revenue, better revenues overall, and a potential catalyst here with the spinoff, Arvind Krishna promised to happen by the end of the year. What's your impression on the stock?
Yeah, I mean, there's certainly a storyline here that it is getting to spotlight the growth opportunity. Quarter was 178.
There we go. We okay?
Forecast since then, and then they came in.
Okay, I'm hoping we're good now. Sorry about that. Sometimes that happens. I know that's annoying. All right, so hopefully we're good now. I just made a little change, and I think when the update kicked in, it froze there for a second. So hopefully we are back and good. So this is actually really good on IBM. Very, very good on IBM to see green on IBM. Mostly because this is really, I mean, here's a company that we weren't really, in my opinion, expecting a beat from. So if we're not expecting a beat from them and we get a beat, that's very good. So very, very good. I think that's going to set a nice precedent for the market. So no, I'm not on Wi-Fi. It's not a bitrate problem. It's a computer problem. If there's too much up on the computer, Final Cut, Photoshop, all these things, when they're up, it lags, unfortunately, sometimes. So I close those things. Anyway, in the after hours, the big thing moving up right now is obviously, as expected, IBM after beating. Generally, that's what you would expect after a beat. You've got Matterport coming up about 1%, 1.5% here. Plug coming up about 2.2%. And some recovery here in that 1.5% range. Although you do have some continued declines over here. Although Naked really just giving back about 2.8% after the 16.3% here. You've got the cannabis ETF. This one bobs back and forth. So I don't know if we can really call that one yet. Canoe giving up what it gained today in the after hours here. Marathon also down about that 0.5%. So something's definitely moving. Let's see how did Voyager end the day? Yeah, Voyager ended 1107. Big Digital ended up worse at about 1857. Tattooed Chef did end down 11.2%. So let's take a peek here. What else? Naked, Dogecoin. Dogecoin, there we go. It's trying to break, folks. Trying to break. Look at that. We just briefly broke that there we go. We keep touching it now. This is good. If we can get really above that 0.40, if we could even just go 4.1, my gosh, I think that would be such a nice break for Doge here. That could really lead to a nice run of a candlestick. But nope. We are bouncing right back off that 4.0 number. So we'll see. Right now we're at 3.992. It's incredible, these fractional numbers here. So relatively small. All right, so we got IBM numbers. United is still coming up. Let's take a listen in, though, to, well, let's see. CNBC is on commercial. Fox is on commercial. Let's take a peek then at Bloomberg.
Deepen globally, and a lot of capital start to move to other opportunities. But that's yet to be proven. And I think that companies that have some international revenue sources, we want to watch for what are your volume sales doing? Yes, you're going to have some potential currency volatility, but how's your top line growth really going? And how's it going to go forward? Are you going to see accelerated growth into the second quarter and third quarter? Is this more than just a U.S. specific recovery story right now?
We've quickly finally heard all day today that the S&P has already priced in all of that big growth. What more do we need to hear from this earnings season to make sure that that isn't priced in?
Yeah, so our view actually is the S&P probably did price in the first quarter growth, but maybe not the growth prospects going forward. And I think that that's where you really want to watch on the incremental sort of forward growth prospect commentary side is what are your revenues going to look like going forward? What is your margin pressure going to be like? Are you going to see this inflationary sort of price increase emerge in the form of margin pressures going into 2022? And how does that impact the growth outlook? Because our model says,
just for a pause, for those of you talking about the computer specs because of that brief little lag here, you tell me, okay? It's an 8-core Intel, but it's a Mac. That's probably where most of you just going to stop. 8-core Intel, 96 gigabytes of DDR4 RAM, and then we've got the AMD 57X here. So with 16 GBs of onboard. So I don't know. You tell me. I feel like it should be capable of handling having Final Cut open and a live stream at the open. But who knows? Who knows? Apparently not. You have too many things open. It gets sad, which is sad. All right, let's keep going here.
IT services analyst for Bloomberg Intelligence joining us right now. Anurag, this is a pretty big deal. I mean, Arvind Krishna, he's been there a year and he looks like he's got the cloud business back on track.
So, Romain, if you look at it, the revenue is up 1%, but if you adjust for currency, the revenue is still down 2%. But having said that, it's better than the 8% decline last quarter. So all in all, I think it's slightly better than expected, and it's a massive reflection on a rebound in enterprise IT spending. I think this is what's driving this particular beat.
Interesting. It's cloud, it's cognitive software.
Yeah, I should get an IBM. Hey, they beat earnings. Let's go get IBM. Maybe I should have bought their stock and they would have paid for it. Oh, well. Oh, well, that happens. So, okay. Well, let's see. What else? What else is anything else changing in the after hours? Not really. Let's look at top news here for a moment. All right, let's see. Let's go to top news on the Bloomberg. Top news. Let's see what the top news is. All right, let's see what we got. Top news, tech leads, stock drop from record. Bitcoin whiplash offers harsh reminder of retail traders' sway. Yep. Right. Democrat flouts paying for SALT cap repeal with more tax audits. Just what people want, more audits. Soaring Canadian housing costs targeted with foreign owners tax. Let's see. Social media data leaks draw scrutiny from Euro regs. Billionaire owners divided over soccer's new super. There's like no news. You know, we had Tesla news. We had Peloton news. We covered both of those. But otherwise, lumber price surge is fueling. Hey, look, somebody asked about Nail. Why do people always ask about the triple leveraged ETFs on days that they're doing well? Like, ask about stocks when they're doing poorly. But no, people only care about things when they're doing well generally. It makes sense. Psychologically, feels safer. It feels safer to buy a stock that's doing well. It feels poopy doopy to own a stock that's doing poorly, or to buy a stock and then for it to do poorly. Very, very common. Apple isn't made. Well, I don't know. The whole Apple debate. No, nothing's wireless. No Bluetooth. No, I mean, I guess the only thing that's really Bluetooth is like the keyboard. But did it really freeze again there for a second? That's so weird. I don't know. I don't know. You know what I might have to do? We might have to just try a different stream processor, maybe. Maybe we'll do that because we have, right now we're using StreamYard. Maybe we got to give Streamlab a try and see if it's the software. Because otherwise, there's really nothing in between me and you. There's no OBS. People like, change your bit rate. I'm like, I don't have OBS. I can't change it. Oh, you know, it's the Peloton treadmill. That's it. It's Cookie Monstering the cable. Oh, man, that's bad. Too soon. Hopefully you watched my other video, and that would make more sense about the Cookie Monster. Anyway, all right. I don't really see much else happening here in the after hours. We can briefly take a peek here at... Let's see, what do they have over at CNBC? Let's see what Sarah's talking about.
No, I don't think so.
Viacom?
Google.
I'm sorry?
I don't know. Pastrami can be very good. My follow.
What? Switch to CNBC and now we're talking about pastrami. Oh man, I tell you, this is how you know. This is exactly how you know there's no news.
These stocks get hit, whether they're GDP plays or not, and no matter what the valuation is, they're lumped into the broader tech play, aren't they?
Yep, you're absolutely right, Sarah. So, the good news is we're a hedge fund, so we have shorts. And so we've started to put a lot of shorts on in the semiconductor space. Because why? Because it's a space that everybody expects massive beats and raises.
Ooh!
They pre-announced upside, and the stock got hit off of massive numbers. $1.20 in EPS, you're expecting 91 cents. But what we're also seeing is there's pockets, specifically within the smartphone supply chain, where you've got inventory actually building up. There are other areas like autos and PCs where you don't have that issue, but in semiconductors in particular, expectations are through the roof. And you saw that with TSMC, right? They reported, they raised guidance for the full year. The stock got hit last week. Biggest foundry in the world. So, and semis in general were down last week. So we're trying to balance, our positive views. The good news is Facebook's got the whole IDFA stuff going on with Apple. Google's got some stuff around tracking as well. And so that's helped to keep the multiples maybe more in check than they would be otherwise, which is great. Semiconductors is the exact opposite, where, expectations have just gone sky high. And we think there's actually going to be some issues when end demand, if we're out going on vacation, we're not necessarily needing to buy a PC or a Mac or, whatever. Some of those things are going to start to come back in as supply improves. So that you're absolutely right. As yields go up, Facebook, Google will get pressured, but we think things like semis will get hit harder.
Dan Niles, always good to check in with you and your positions. Thank you for joining us.
Thanks, Sarah. Thanks, Wilford.
Now let's go back over to Mike Santoli for a look at how this bull market is tracking compared to previous bull markets. Sure seems faster, Mike.
I think it's very interesting what he just said. So he just said he's a hedge fund. Okay. So he's obviously speaking or represents a hedge fund. So he's obviously representing his own interests here. So their argument is, hey, look, expectations are so high. Let's hedge all of our longs, which basically means take a short position against our longs, so that in the event these expectations don't pan out, we're still protected. That could be what's actually leading to a lot of this pullback going into earnings, is that the market is potentially believing expectations are just too high. Let's get back to reality here. So really the only thing that's going to do well to really unbury us from this is actually strong earnings to go, no, you got nothing to worry about. Look how good Q1 is. Look how good Q2 is. It's actually a good argument. That helps us understand a little bit what's happening in the marketplace. That was an interesting interview, even though we don't like when the suits short things. Makes a good point. Let's keep listening.
Flash crash is a warning sign for crypto prices more broadly. Plus, a plan to form a super European soccer league is outraging many fans, this one included, but not investors. Manchester United stock up 7% today. Juventus stock up also.
Well, another reason hedge funds like to hedge too. I mean, obviously the theory is, better long-term returns, more stable returns, which hasn't statistically been true. But one of the big things is it's a way of keeping your clients, right? If you're like, don't worry, client, things are red, but look at all this money we're making on our short positions. It's just a client retention bullcrap game is what it is.
Let's bring in Vildana Hyrek, who can maybe help explain what we saw. Is 54,000 the buying opportunity? That's what Romaine keeps telling me.
Well, for some people it is, and you've seen prices recover a bit from that plunge that we saw on Sunday. But as you said, this is really unique to the crypto world. Trading is available 24/7 around the world. So you oftentimes see these huge price swings during weekend trading. It's not that unusual to see double-digit swings since investors are able to trade around the clock. It's a bit harder to actually pinpoint exactly what's behind any crypto sell-off, really, but there's a few theories floating around. One, and it's a perennial topic in the crypto world, it's that you could potentially see regulatory scrutiny around the world even. So we saw in Turkey, they've already banned cryptocurrencies as a form of payment. You're seeing analysts saying that we could see much more of this. And then second, you really had this rally that had gone so far, so fast, and there had been so much excitement around Coinbase's listing.
Yeah.
Last week, you saw Bitcoin hitting an all-time high, and then
Yeah.
you had Mike Novogratz tweeting saying, with hindsight in mind, it was almost inevitable that you'd see this.
Yeah, there's a lot of inevitability. Of course, hindsight always 2020. I am curious here, when we talk about the role that retail traders would have played in the run-up here, how much of a role are they playing right now in this bit of a pullback that we've been seeing?
It's a really, really interesting topic because this weekend, the volatility that we saw on Saturday and Sunday, it sort of shows the might of the retail investor. So typically you have professional investors, professional traders stepping back on weekends. They're much more active on Monday through Friday, really. And you have retail investors still able to trade cryptocurrencies on weekends. And that's potentially, or one of the reasons why you're seeing these huge price swings that do tend to happen pretty frequently. So Bitcoin inflows on exchanges, they're just much higher Monday through Friday. And so for analysts and for strategists, what that means is that retail investors are sort of running the show on weekends. If I could just point to a very interesting anecdote, I want to give a shout out to Mike McGlone at Bloomberg Intelligence, who said his plumber told him that he bought Dogecoin. And so that sort of is exemplary of this retail interest in cryptocurrencies that we've seen in recent weeks and really recent months.
Canary in the coal mine, Dogecoin. I just thought all the flows from Bitcoin was obviously going into Dogecoin. Valdana Hayek, of course, Bloomberg. I mean, who knows where that coin's currently trading, Taylor? Sadly, I can't see it on the terminal.
Store of value. That's what Romaine says. Did Dallas Fed president say it was the store of value last week? Just the wrong market.
Probably not Dogecoin.
Don't put
Probably
words
not
in his mouth.
Dogecoin.
What are we doing on What'd You Miss?
Yeah, that was an awkward kind of dangling participle there. They were talking about Doge, and then she goes, quote, store of value. Taylor's talking about Bitcoin, and the other ones are talking about Doge. Confused.
I'm
confused. Hey, more talk about crypto.
Of the market reacts, and certainly it sneezed. The rest of the crypto market caught a cold, and everything went down 15-20%. Has recovered to about 55,000. But in terms of what happened, there was a few dynamics over the weekend, whether it was the Chinese mining, fear, uncertainty, doubt on Twitter, some profit taking. It was a constellation of lots of events that really drove the price down, and it's recovered about halfway.
It's a reminder that it can still be risky and rocky for individual investors. How much do you see retail as driving the bus here on some of these prices of cryptocurrencies like a Bitcoin or even a Dogecoin or a Coinbase stock?
Yeah, I mean, if you look at the broader market, you see people getting more and more access to Bitcoin. Coinbase is the largest crypto marketplace in the U.S., and that provides more access for people to get Bitcoin. And it is volatile. It's gone over 670% over the last year. Its average IRR over the last 10 years since inception is about 200%, but it's been a volatile path to get there. And so it's different now because you have other participants playing into Bitcoin. So there's an underpin of institutional interest, and you see this in the treasury of MicroStrategy and Tesla, Square, PayPal, and others. And then you have Wall Street players like Goldman Sachs, Fidelity, JP Morgan, providing research and access to Bitcoin. So it's the underpin for Bitcoin is a lot different than it was certainly a year or 3 years ago when we saw much more volatile swings.
Matthew, clearly Bitcoin's performance has been very strong overall, and the volatility remains significant. But when you also throw in the likes of Dogecoin and its extraordinary rise last week, even when it's on the up, are you looking at it thinking, gosh, I wish it would just calm down a little bit because this doesn't help the long-term argument for these cryptos as being a genuine store of value?
It's a great point. You look at Dogecoin, which was originally made as a copy of Bitcoin, And it was kind of a meme-led community. And you take a giant step back, despite having a 400% spike over the last week, and it's now valued at about 50 billion. The giant step back is you look at elements that are absolutely new. They're happening in real time. Look at Wall Street Bets and GameStop. This is cooperative capital. These are people that have access to trading. They have access to information. The way they communicate and collaborate between Reddit or Twitter or Discord are all new avenues for figuring out alpha or thinking through what the next investment is. So it's less about Dogecoin for me and more about there's a new community that is altruistic, wants to make money, and wants to have some fun along the way. And so with that, you're going to see things like GameStop get rescued. You're going to see other corporate citizens that aren't doing well.
Okay, hold on. United just reported. This is actually going to be good to look at. So United Air, let me see if I can pull the darn thing up here. UAL is the ticker. All right, individual company news. This just came out. So we have loss per share of 750 versus estimates of 702. Greater loss per share than expected. Not so good. IBM was good for tech. This is not so good for recovery. Let's see. We've got Q1 passenger revenue was 2.32 billion versus estimates of 2.38. Q2 capacity down about 45% versus Q2 2019 is the current expectation. Whoa. Q2 2021 expected to be 45% less than 2019. That's huge. They're basically thinking Q2 revenue is going to be half, or at least Q2 capacity is going to be half of what it was in Q2 2019. That's incredible. But it did have some positive remarks here, like rebounding demand is driving a clear path to profitability, positive adjusted EBITDA, return to positive cash core. Okay. Targets to exceed 2019 margins. Okay, so their goal is to get to better margin levels, so more profitability than they had previously, but still expecting way less revenue, which is exactly what you would expect them to say. Like, oh yeah, don't worry, our revenue might be down, and our revenue might be down 45% from 2019, but don't worry, our margins are getting better. Let's see what else they had to say here in the financial release here. All right. The United team has now spent a year facing down the most disruptive crisis our industry has ever faced. Shifted our focus. Blah, 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 blah. Let's see. Talk. First quarter financials. Okay. Let's pull this up a little bit more. So based on current trends, the company expects second quarter 2021 total revenue per seat to be down 20%. Okay, so total revenue per seat is expected to be down 20%, but capacity is expected to be down 45%. So of the seats they fill, they still are going to get less money than they used to get. And capacity is going to be way down. I mean, this does not sound good. Nothing about this sounds great. This is a potential, in my opinion, watch the stock screen. I don't know. But this is a potential risk factor for the recovery stocks, right? If you start having a bunch of crappy recovery earnings where all of a sudden people start realizing, oh, damn, I put way too much stake in the recovery stocks, thinking they would recover faster. I don't know. This doesn't sound good so far. Diversity goal. Let's see. Taking care of our customers. I want to know about money. Money. Dollars. Here. Thank you. All right. So, okay. Statement of operations. Passenger revenue. 3 months ended here. Oh, yeah. I mean, a huge plummet comparing to 2020. No doubt. Cargo is actually way up. They've almost doubled their cargo revenue. It makes sense. I mean, that's what I would do if I were a passenger airline. Like, rip the chairs out, load this crap up with Amazon goods because we need to make money. Probably need less flight attendants. Not that that's probably I doubt that's one of the smaller more expenses. Actually, but then again, never mind. Look at that. Well, but then not specifically flight attendants. This is maintenance crews and all this. Salaries and related costs are huge relative to fuel. I mean, you almost have almost 3 times the expense goes into salaries and related costs than fuel. Still, though, I mean, how much of their revenue goes into fuel? That's interesting to me. Passenger revenue. Can I just get total op rev? Yeah, here we go. Total op rev. It's about a fourth. About a fourth goes into revenue. Yeah, a little less than a fourth, like 18%. Wow. All right, let's get to like a balance sheet here. Let's see. So, okay, this breaks down regions. This breaks down, what do we got over here? Passenger load factor, consolidate 56.8%. Wow. Big declines here. Jeez. That means most planes are half full, basically. Wow. Passenger revenue per available seat mile. Yeah, much lower. I mean, every metric is just in the toilet, basically. Yeah. Okay, let me quickly get to... Can I get to a balance sheet, or did I already go past it? If I went past it, I'm not going back. Balance sheet! Found it! Okay, so... Cash position has short-term investments. Cash position has improved. We're at 12.6 billion versus 11, so a little bit more cash now. So that's good. Got some receivables. Okay, good. Current assets 16. Always looking for current liquidity issues. Current liabilities are at. Oh, wow. They got a lot of current liabilities. $14 billion in current liabilities. And current assets are at 16. I mean, they still got to run a tight ship here. I don't know. I have absolutely no idea what the stock is doing. I just would imagine it shouldn't be good. If it's green, it's just the insanity of the market. Okay, yeah, 2%. That makes a lot of sense. I was going to say, like, if that's green, I'm just going to lose it. Let's listen to CNBC talk about it. What do they got? See how the other recovery stocks are doing too.
3.22 billion. The street was expecting 3.26 billion.
I mean, I kind of just read this, so I'm not going to let them just say the same thing over again because it's boring. Yeah, American Airlines falling on this news too. Because United and the other major airlines haven't been able to charge change penalties on exchanges, and because business travel is so down. Yeah, I believe that. I believe it's very difficult for them to charge the fat fees for canceling flights or whatever. I believe that. I also believe it's very difficult for a business to come back. You know, business coming back will be. I just don't think it will. Yeah, unfortunately. Yeah, I don't think it will. All right. So what else do we have here? I wouldn't analyze it. It's already priced low prior. I wouldn't analyze UAL. It's already priced low prior. I'm not sure what you mean there. I'm more bullish on cruise lines over airlines. I mean, I have to say, if you can get fully vaccinated cruises, I think a lot of people are going to go for that. Honestly, like, I'm kind of jumping up and down about the idea of going to like Disneyland. Because think about it. 1/3 capacity. Imagine if they did that on cruise lines. Cruise lines open again, 1/3 full. But then again, I like it when there are a lot of people on the cruise. It's like more fun when there are more people because the crowds are funner at like the comedy shows and stuff like that. So I don't know. I feel like Disney empty is cool. A cruise too empty would be a little eerie. I would not be making bets on stocks coming back big by summer. I would be more prone to focusing on stocks coming back by the end of the year. I would be very patient with your positions. Anything you're adding today, I would be very, very patient with. Kevin's going to Disneyland. What made you think that? I work for a travel company and we need people to vaccinate. Yeah. I keep hearing lots of people getting lots of spare vaccines sitting around in different areas of the country. Different beliefs. You know, they're now doing studies in the United Kingdom, challenge studies they're calling them, and they're actually purposefully trying to reinfect people with COVID who've already had COVID. Not the vaccine, but have had COVID, to see if they can actually get reinfected. So they're taking healthy people and then trying to get them to rebuy or to get reinfected to see how sturdy those antibodies are from you actually having it or having had COVID. So that'll be very fascinating. That'll be a big tell too, because that'll tell the world, like, okay, if you had it, you're good, or if you had it, you're not. So that'll be a big moment. Anyway, okay, folks. Check out the programs down below for the amazing programs on building your wealth, making YouTube videos so you have more money to go get stocks, real estate sales so you got more money for stocks, real estate investing so you have more money for stocks. What am I missing? Real estate sales so you have more money for stocks. And then stocks and psychology of money so you know how to actually not feel like garbage when the market's going down. Yeah, and hey, if we hit $1 on Doge, the beard stays. Right now, we're still sitting at that 39.6 number right now. We'll see. All right, folks. Appreciate y'all.